Welcome to the Jewel Lite, of which this indicator is free for the first month of the new grand update of the Krown Trading application, update number 3, which we're very, very happy and very proud of. And with that in mind, I should probably let you know how and where to get this indicator. So because this indicator will be free for the first month of this new update, we wanted to give everyone a chance to check it out, see if it's for them, see if it's not for them. Also, just as a thank you and well, just enjoy the fun with it. So let's go over here, and anyone can do this. This is public, this is free. All you need to do is go into TradingView, and you're going to go into the Indicators and Strategies tab on TradingView. Just click it right there. And all you need to do into the search bar is type in Jewel Lite, just like that. Beautiful. And then you can click on it right there, of which I will do, and that will bring it up in the bottom pane right here. And then there, it's yours. Enjoy. All right, so now that you've actually received your Jewel Lite, I want to talk about what exactly this indicator is. This indicator, that being the Jewel Lite, is essentially a momentum and volatility indicator all in one. Now, what is the difference between this particular indicator and the full Jewel? Well, that would be the full Jewel is what I'm trying to say, has a trend component and then also several points of secondary confirmation, which provide higher fidelity and more impressive signals overall that have a higher hit rate. Very just simple right there, but the Jewel Lite itself will get the job done, especially for more short-term plays, but we do need to go over strategy in order to make this as much as relatable and useful as possible. So let's get into it right now. I should first explain the different moving parts in the Jewel Lite. You'll notice here you have one oscillator that continues to go to and fro. That is the main moving part. We will just call that the oscillator in this case. Of course, it is indexed on the right-hand side over here, and your general understanding of momentum oscillators will very likely apply. Above the 80 zone would be in the critical area, aka we are likely nearing exhaustion points. And below the 20 read over here, the same thing for exhaustion to downside moves. All right, what else do we have going on with this? We've spoken about the oscillator itself. We've spoken about the index over here. What are these lines? These lines are essentially an auto fib, which allows you to kind of judge general areas where momentum is going to be coming into support and resistance. Doesn't need to be exact, but it does need to be about on par. For example, you can see that price action is accumulating around this region right here a few times, and same thing on the bottom end over here. Yes, you do see a few pivots along this side and this side as well, representing the 61.8 versus the 382 in this case. Sorry, doing some bad conversions in my own mind, but overall, your general knowledge of that will apply. Less important, however, with the Jewel Lite. More important with the Jewel, the full version, of course. But in this case, just wanted you to have full information. And then, of course, the most important way to understand how to use this particular indicator in the way that I'm going to present here is the actual color shifting of this oscillator. So you'll notice that it goes from light blue to white to dark blue. Okay, so what do these mean? What do these correlate with? These correlate with shifts in volatility. So when you see an up move alongside the cyan color, that means that you're having momentum plus volatility. And realistically, whenever someone is trading a momentum indicator, it's really meaningless without volatility, which is why we included this component and one of the things that I'm very proud of it for. And so when this turns light blue, you have those two components firing off at the same time. Now, is there another component that is relatively important alongside that? Yes, indeed it is. We'll get to that soon enough, but a quick insight in that would be trend. When it turns white, the volatility is contracting, meaning that whilst you do see it technically still have even one more tick to the upside, and then of course 2 ticks to the downside before shifting to dark blue, it is essentially not a trade zone, at least in the way that we look at it from here. It could also be considered a take profit area as well, amongst other things, essentially assuming that you took the initial trade on the first color change over here. Yes, the white would be suggesting, hey, if you're looking for the volatility play, it is now coming to an end. It is time to be preparing for the next move. And in this case, the dark blue represents the opposite but equal to the cyan with downside moves, meaning that you have downside momentum alongside volatility expanding. So you have those two conditions met. I want to now talk about the ideal timeframes to be using this indicator on. Now, this is going to be coming at it with a caveat that this is with my preferences. Of course, there are different ways to trade this. I would suggest if you are considering any one of those other ways to trade it, certainly make sure to back test that strategy in full detail so that you yourself have the statistics that go alongside that and that you can be confirmed or denied if that strategy is going to work. But in the way that I look at it over here, this strategy that I'm going to be presenting soon enough works best, and I would even go as far as saying it only works on the hourly, the full hour, and the daily specifically. I have found it somewhat successful in other timeframes as well, but these are the timeframes that I focus on, and specifically the hourly and the daily, actually, specifically the hour and the daily. All their timeframes, I've not found acceptable results to myself in the way that I would trade this indicator itself. And then also, let's now talk about the third component and what needs to be understood before ever taking a trade with this indicator as a guide to begin with, and that is understanding trend. Defining trend and understanding trend is outside of the context of a video like this that is covered in the Neophyte program and the technical analysis program. And of course, I have plenty of videos on it on my own YouTube channel that are 100% free that you can view at any moment in time. So I will just trust that you already know how to identify a trend. And the general rule with this will go, if you are trading the Jewel Lite in the way that I look at the color shifts over here, I only trade on the same side of the dominant trend. In this case, that usually means a daily. So that means if the daily trend is to the downside, I will only take downside signals on the hourly or full hour. Does that mean that the upside signals will not work out? No, it does not, but they will have a lower hit rate, very specifically. So let's go through a few examples here, and then I'll talk about a few ways that I trade off this and also manage risk. All right, so let's focus on this area here. Let's define the dominant trend on the daily. What is it? It is to the downside. So if I'm identifying that right here, first and foremost, I will only take the downside signals. And you can see right here on the 13th of November, the 13th to the 14th, that is, we get our first dark blue signature on that first lower high right here. And while I would say that not every result is going to be as good as this one, in fact, well, they are pretty damn powerful on the daily. So I shouldn't say that they're not all going to be like that, but it's not always going to be a 20% move, for example. This one was rather powerful, as you can see. And the best way to take this on is to, after you get your first tick to the dark blue, you enter. Now, and again, I want to be very deliberately clear about this. It will require a bit of patience because you will need to wait for the actual candlestick to close before that color shift will happen. So what we're going to do now is I'm going to run you through a few examples. We're not going to hindsight trade this. I want to give this the least benefit of the doubt possible so that you could see how this likely works out in reality. So again, we have our first lower high right here. So we know that the trend is shifting. We are looking for downside signals. We see also that the oscillator itself is coming off of the highs. So that's also another good indication that it's probably going to be a good trade. And as soon as this one turns blue, we would say that was on this closure right here. And the closing price was $65,502.47. Just reading that from the top, by the way. And as you can see, the next day actually trades above that by a fair bit, actually more than $1,000, $1,300 or so. But when we're trading a daily, we do have to understand that, of course, that is going to come alongside, well, just more natural risk. We're dealing with big numbers here. But ultimately, as you can see, even hindsight trading this one, which to be fair, I mean, this was a pretty damn good signal. Bitcoin trades all the way from a entry price of about 65,500 all the way down here to where you lose and you get your first white signal. That would be on this closure right here. And that's on this closure on the 23rd of November at worst, at best, this one right here, obviously. And you can see that trades down to 57,573. So nearly a close to a $10,000 move in this particular example. It's not always going to be that good, but this one, well, happened to be pretty damn good. Now, we ignore this signal right here. Why? Because it's a downtrend. Does this one technically give you a bit of a profit? I would say, well, not really, because you're entering basically on the signal. Yes, you do trade up the next day, but hey, I don't think that this is a reasonable one to be taking. This one over here, again, if you were to enter on the signal, taking the trade on the closure, so the worst possible time, I mean, theoretically, like again, we're not going to hindsight trade this. The entry would be 57,322.77. Yeah, you do trade above there, you know, 3 days in a row right there. All of them rejections. Technically speaking, you could have theoretically made out with a profit, but that's not what we're looking for. And of course, this, you know, I'm not going to say that this is always going to happen right here, but hey, that is what you're looking to avoid. And then you get into this segment right here. And what does this segment do? You do see it turn dark blue on this closure at 49,409. Bitcoin trades up from there, a good amount too, almost all the way to $52,000 from that price point, which is a significant move. But the indicator itself tells you to stay in the trade until all the way over here, where you dump back down towards 46,720 or so. So I thought that deserved a bit of repeating. Of course, this one right here did not work out that well, and fair enough. And then it actually did catch a nice upside move right there on the daily specifically. But let's now apply this to actually my favorite time frame on this, which is the hourly. And so again, we're going to pick out specific areas where we see uptrends and downtrends on the daily, and then apply that knowledge to the hourly. And then I will go over risk management in this case. Now, actually, before we get into that, I do want to say, look, while I am suggesting you can easily use this, or I wouldn't say easily, but you could theoretically use this in the case of simply taking profit when you see the oscillator turn white after being a solid color, there are going to be better ways to do it, more optimal ways actually. Doesn't mean that that's a bad way. It might be acceptable to you, it might not be acceptable to you, but the other way, and looking at this from a very simplistic standpoint, would just be quite simply going off of horizontal support and resistance. Again, outside of the context of a video like this to, you know, go over the details of that. But for example, you know, we could do the exact same thing over here. We see that we have the horizontal boundary at the 53,560 region. You can see after this first downside signal right here, that would have been a phenomenal place to have been taking profit at. Again, different strokes for different folks. Some people might be more aggressive, in which case they will also be taking some profit on this horizontal level right here at about 58,581. What I'm really doing right now is I'm throwing out ideas into a way that you can personalize this indicator for your, you know, general trading personality, which everyone's going to be naturally different. And yes, there's many other ways to do this as well. I just wanted to throw out a couple of very easy to understand ways so that you can employ them, and then hopefully over time you will start to graduate from that, come up with your own unique ways of doing it, back test them, and it'll probably have an even better hit rate. But that will get you started. Okay, so let's now apply the same sort of strategy to the lower term timeframes, and then we'll talk about risk management. Okay, so let's go over, let's do this right here. So again, we're going to focus on all the price action after middle of November when Bitcoin entered into a daily downtrend. And what we're now going to do is we're going to go into an hourly. And we're going to scroll back a little bit because why not? And let's just go over here. This is in the heart of it all. And I want to show some examples on the hourly, which is my favorite time frame personally on this indicator. It just, you know, signals come quite often. They're usually pretty damn good. And yes, you can trade against the daily trend. You see plenty of examples right here. Yes, they do work out, but they will have a lower hit rate, point blank period. And I do want to hammer in this point just one more time. The color shifts in the direction against these critical areas, around these critical areas, is what I should say, actually do have a higher hit rate as well. So let's say you see the oscillator in this critical region above the 80 and it turns down, probably going to be a good downside signal. In fact, you can see right here, again, hindsight trading this one. Well, let's say that we enter on the worst possible closure. So that would be right here. That would be at about 58,911. Yes, Bitcoin does trade back above there again. If you're going to manage risk in the way that I'm going to suggest, you will not get taken out of that trade, and then falls off the face of the earth all the way down to $54,000. Not always going to be that good, but this was an extreme example. And to the other side over here, when you see extremes hit and it starts to turn back up and turn that light blue color right here, well, this was a decent enough trade, to be fair. Even though it was against the trend, you would have entered very likely at the worst point at 54,424. Yes, you do have to eat a bit of a drawdown for a while. You do get a chance to get out at a profit when it does turn white, just for what it's worth. Again, trading against the trend, not going to be as profitable as you do see right there. Okay, let's call up another couple examples. Let's go with this one right here. Another really good example. You're around the critical zone. The daily trend is to the downside. We see our oscillator turn dark blue. That is right here. I would say not hindsight trading this one, which is going to be at a closing price of 65,611. Yes, Bitcoin does even trade, well above there actually by about $1,000 or so on an hourly, which is big, very, very big. But again, the way that I'm going to postulate to manage risk does not take you out of the trade. And after that, well, that's your big move down from, well, basically right here at about 65.6 all the way down to, where does it tell you to get out? It actually tells you to get out right around here. And then actually you do miss a lot of this move. That's going to be the case on a lot of hourlies, obviously. I'm sure that if you went to a 4-hour, probably would have caught more the majority of that move. And again, all of the strategies that I'm presenting right now, all of the knowledge and logic that I'm presenting right now can be directly applied to the 4-hour, daily, 4-hour, and hourly. These are the 3 time frames that I think operate best for this indicator specifically. Another just quick example right here. We have an entry not right here. Technically, it turns dark blue and confirms right here, 64,523.12. Yep, Bitcoin trades a little bit above there. Again, a little bit of a drawdown a few hours later. But as you can see, takes you all the way down here. About a half day later, it looks like, down to $63,000 after entering in at 64,523. Even the wick is actually significantly lower than that, to be fair, but technically speaking, would have gotten out right here. So not bad, I would say. Okay, cool. So we've gone over some pretty, I think, simplistic ways to be using this. Again, taking profit can be done in a multitude of ways. Entering can be done in a multitude of ways as well. Obviously, I'm presenting a very, basic way of doing it right now. And these signals that do happen in the middle of this zone right here, I do want to be very direct in saying, if you're seeing a counter trend signal in the mid zone here, it's very unlikely to work out. The same side of trend signals in this region here can be pretty okay, but realistically, it's the downside signals that are around the 80 or especially above the 80 reads over here alongside the same trend, or the upside signals from 20 or a little bit below 20 are absolutely the ones that I quite look forward to myself. So let's talk quickly about risk management, and then I will set you off on your very merry way. And how are we going to do this? Okay, so I gave the example over here where you get an entry, technically speaking, you get an entry when it confirms dark blue. And again, I'm not going to hindsight trade this. I'm taking a bad entry specifically. So I'm going to enter here, okay? When you're looking at this in the moment, you're going to see it turn dark blue before the confirmation, obviously, but it's not until it closes that it's fully confirmed, just so you know. Okay, where do I manage risk? Well, this is why you absolutely need to know how to define trends beforehand. And what I will do is I will take the prior swing high and I will mark off the wick high of it. And I will use any sort of a closure, in this case above that region, to close this position. You see that we do get a wick above, that's fine. We just don't want to see any closures above. Now you'll bring up a good counterpoint saying, hey, Krown, what if we get a situation where price action zooms on through and it doesn't close until you're all the way up here? Yes, very good point. That is why, and a bit of an insight into the technical analysis program, we have what's called essentially an expedited way of managing risk. And what I'll do after that is I'll go back to the prior range swing highs, or even just a major piece of price action, and I will manage risk on a wick basis there. It's not going to be perfect. In this case, we do see a range break below this region right here. So I'll take the wick high of that, and I'll say, hey, anywhere above this level, I'm out. I want a market stop. I don't want anything to do with this position. It's not good. It's not what I'm looking for. Let's come up with a few more examples. That one was actually not the most obvious, to be fair. Let's do this one's actually a really good one right here. Okay, we get another signal. Again, we're not going to hindsight trade this. We enter in, not necessarily at the best point, but that's okay. That's the purpose of these videos, to not give this one the benefit of the doubt. Okay, so we enter right there, 59,702 and 66 cents, by the way. That is on closing price. Okay, so where am I managing risk on this trade? Your prior high on a wick basis is right here. Any sort of a closure above there, I don't want this position. I'm out. However, on an expedited route, I would say your range highs in this case, your prior highs after that are right here, 61,565 coming in from this high. Again, this is why it's very, we strongly suggest that you do have a general understanding of, regular technical analysis to begin with, as it's only going to make this more powerful. That would be my, what I call expedited risk management, an emergency risk management, meaning anywhere above there, I'm marketing out. I don't want this position. It's not worth it. And yes, that will happen. This indicator, like any indicator, is not perfect. So I want to end on this note right here for this whole demonstration. When it comes to trading, when it comes to technical analysis, despite whatever indicator you might be using, it doesn't matter. What matters most is being able to backtest the strategy that you yourself are considering trading in the exact way that you're considering trading, documenting the results. The more times, the better. Realistically, hundreds of times is very much appropriate. And then if the results are acceptable, you start to apply money towards that strategy. If that is your goal, and then start slow, start low, and then ramp up as you feel more and more comfortable. Now, I realize we didn't do any short-term upside signals on an hourly. I guess we'll just briefly go on this. I know this started to end it, but well, yeah, might as well. All right, so let's go back on over here. This is about the time when Bitcoin was in a daily uptrend, coming out of the September lows. I remember this one rather lovingly. And let's look for the examples that we really like to see. So I'm going to find one that almost doesn't work out, actually. In fact, yeah, this one actually doesn't work. This one actually does not work out. Yeah, here we go. All right, so I want to show you what would it look like if and when things do not work out. Then again, this one actually does kind of work out. Well, it's not a great example. Okay, so the daily trend is up. Yes, we see this. This is in early October. We get a long signal right here that it would be at worst point entry would be 56,402. Yes, Bitcoin trades ever so slightly higher than that over in the next few hours. This is not going to be a winning trade here, though. So where would we have managed risk? Where's your low? Right here. Where is your range lows from prior? Right here. Well, would have been taken out of that trade. Again, it's not invaluable. You need to know these things for full disclosure. But here's the thing. It is wise to be getting out on signals, on failed signals like this, because it frees you up to get into signals like this, where we get a beautiful upside signal right here. Again, not hindsight trading this one. I'm going to take it after the first initial pump, entering on the closure, 55,790, and that takes us. And of course, where's our risk management? Well, the prior low right here, or the prior wick low from the prior major low. That'd be right there for a market exit. And then what do you know? We go all the way up basically to here before it tells us to exit. So again, you have to take the smaller losses in order to take the bigger gains. That's how it should work out over time. I would again I would beg you to back test your own strategies to make sure. And from there, you'll have your own confidence, and you'll probably even come up with some even more optimal ways than what I presented in this video. Okay, so that is it for the Jewel Lite. Again, please understand that this indicator is free for the first month of operation here. It'll go away. It'll go away like magic in, I think, around early February is where you can kind of expect that. And just a quick reminder, again, in order to grab it, all you need to do is go into the Indicators and Strategies tab right here, type in Joule Lite. It'll be by AATA Indicators, and you can favorite it and just click it, and that'll bring it up, and then it's yours. Enjoy.